Hey everybody, a lot of people have been asking me, is now a good time still to buy? What's happening with interest rates? What's going on with inflation, the economy, the housing market? Well, let me just tell you how I break it down for people to help get an idea of where I think things are going and what the economic indicators are showing for this period that we're going through right now. Yes, rates are up about 1% from where we were just 6 months ago. They've been shooting up really quickly. We're seeing rates that are getting back to the normal region of interest rates. I know it's hard for people to understand that since we've been in this time with extremely low rates over the last couple of years, that as we see rates changing, we're getting back to a more normal level of interest rates in the mortgage market. And if we look at history, the only time that we've had rates under 4% has really been for 4 periods in the last 100 years. Just happens to be that the last 2 or 3 years we've been able to see those rates, so it feels like that's the way it should be, and it's always been. But really, if you look at the charts that of the historic mortgage rates, they haven't been under 4% for very often in all of the history that we track these things. So that's number one. So don't be scared of 5% interest rate. That's it's definitely what we see coming, but it's nothing to be concerned about. It's more of a normal level of interest rate. If we have hyperinflation, if the Fed starts taking some drastic action because of the economic conditions and we see rates keep going up 7, 8, 9%, then that's going to be a time to really get worried about the mortgage market and the effect that it's having. And the reason for that is because of the supply and demand imbalance. So even though we're seeing this changing rate environment, rates are going up a little bit. We're expecting that they'll come down next year due to the recession that's already starting to have some indicators of that happening. But really the thing to keep an eye on is the supply and demand. Right now, we have a huge imbalance. Builders can't build houses fast enough. They're having problems getting materials. They're having problems finishing the homes that they've started. I've got clients that are in contract that they keep getting extended and extended by the builders. We have to extend the rate locks, add to the costs for these people that are trying to get into these new homes that they've signed contracts 6 months ago, and the builders just can't roll them out fast enough. So there's a problem with the supply, not only of new housing, but existing homes on the market. Nationwide, there's less than 1 million homes for sale right now, and that's putting tremendous pressure on the inventory levels and the number of buyers that are out there shopping for homes. There's millions of people out there looking for homes every weekend and less than 1 million that are in the market. It's a huge imbalance. I would say it was a 10-to-1 imbalance of the number of buyers versus the number of sellers just a few months ago. As rates go up, people see the payments that they're going to be having. They think things are changing. They maybe get a little nervous and pull back. Those buyers, even if it's cut in half, we still have a 5-to-1 imbalance of the demand versus supply. So those are a couple of things to keep in mind. All the indicators that I'm seeing, housing is going to stay very strong. If you look at what's happened as we've come through recessions in the past, every recession that we've come to, first the indicator is that unemployment hits a historic low, and that's exactly what's going on right now. The unemployment rate is at the same level that it was in 1969. So that's how long it's been since we've seen unemployment rate this low. And that's an indicator that the recession is coming. It's already here. We'll start to see that unemployment rate start to ramp up. The Fed will take their actions, increasing interest rates. Then we'll see mortgage rates start to come down and the housing market remain strong. I mean, if you just look at what's happening in the rental market, rents have been going up 10 to 20% each year. And if you look at places like Miami, for example, they had the biggest year over year rental increase. There was a 50% rent increase in the Miami area over just the last year. So there's lots of people out there needing homes to rent. And what that also leads to is more and more investors getting into the market, trying to buy rental properties, taking money out of non-producing vehicles that they have, all these different ideas that people have for investing their money. What a lot of it's coming back to is having a hard asset like real estate that can appreciate. Even though there's all this inflation going on, devaluing currency, the one thing that people are running to right now is investing in real estate. So that's creating even more demand. There's fewer houses on the market. So in my opinion, we're going to see a very strong housing market moving forward. Doesn't matter what the rates are. Rates will go up and down. You can always restructure the financing later. Most of these mortgages are temporary. Nobody's keeping a mortgage for 30 years. So we're seeing people in mortgages from 3 to 5, maybe 7 years before a refinance happens or a sale or some kind of restructuring happens. So that's my little overview on what's happening in the market. If you have any questions, feel free to reach out, call, text, DM, whatever the best way, send me a video, whatever the best way for you to get in touch with me. Happy to talk to you about what I see going on, all these economic indicators that I'm looking at every day. If you have fears or concerns, let's talk it through. Let me help you get comfortable with what the current environment is and what the opportunities are. And if there's an opportunity for you to even get into the real estate market as a first-time home buyer or an investor, I'd be happy to give you all of the straight talk that you need to help you understand what it takes to move forward in this market. Thanks so much, everybody. Talk to you soon.